Diokno says there is a need to boost financial literacy to ensure that they will not be victimized by scams. As of the second quarter of 2021, the number of basic deposit accounts increased to 7.4 million. That's up from 4 million recorded in 2019. On the other hand, active e-money accounts almost doubled to 34.7 million in 2020 from a year earlier. The BSP hopes that 70% of Filipino adults will have a formal transaction account by 2023. Diokno noted that the financial behaviors of Filipinos has changed over the past year as they now prioritize savings, health, and life insurance and preparing for retirement to provide better opportunities during and beyond the pandemic. However, he said that in terms of financial literacy, the Philippines lags behind other countries. A 2020 BSP study showed that 1 in 100 Filipinos has been a victim of investment scams, while 5 in 10 Pinoys have obtained loans from informal lenders. Meanwhile, 5 in 10 Filipinos still keep their savings at home. Diokno says the BSP has already partnered with various agencies and stakeholders to teach more Filipinos financial literacy. The Bureau of Customs surpassed its 10-month collection target by 2.4%, putting the agency on track to meet its full-year goal. Total collections reached 525 billion pesos as of the end of October, exceeding the 513 billion peso target. This figure is also 17% higher than the agency's collections during the same period in 2020. Notably, the BOC confiscated 23 billion pesos worth of smuggled items during the 10-month period, more than double the 10 billion pesos worth of seized items in 2020. Customs Commissioner Ray Guerrero said these numbers are giving him confidence that the agency will hit its 616 billion peso full-year collection goal set by the DPCC. Recall that last year the Bureau's collections fell by 14% due to the slowdown in international trade. Meanwhile, the BOC collected 3 billion pesos from swine meat imports as of mid-November, estimating 3.4 billion pesos in foregone revenues after the government cut tariffs to stabilize the pork prices. Now, Asian stocks look set for a mixed start. That's after the Treasury yields over in the U.S. as well as the U.S. dollar jump as Jerome Powell has been renominated to head the Federal Reserve, and that has fueled bets on quicker policy tightening. You can see on my terminal here how Wall Street overnight trading in the red, and quick check on Asia Pacific on that mixed opening. You also have Europe, which has been suffering lately. Germany's latest surge in COVID-19 infections is worse than anything the country has experienced so far, according to Chancellor Angela Merkel. Austria went into its fourth national lockdown yesterday. But on the upside, you've got Pfizer and BioNTech saying their vaccine demonstrated 100% efficacy in adolescents aged 12 to 15 in a long-term analysis with no serious safety concerns identified. Now let's take a look at our open here, down by 0.2%, sliding to 7,200 levels. This as the Bourse has now announced that they will soon be returning to pre-pandemic 5-hour trading schedule. So get ready for that. That's going to start from December 6th. Market will be closing at 3 p.m. and the pre-open will be at 9 a.m. with a recess or a break from 12 to 1 p.m. Now let's take a quick peek at our big movers for this morning. 7 minutes into trade, Pure Gold leading the charge here, up by 2.9% together with Converge and PLDT. But on the downside, of course, dragging the Bourse down are a couple of Ayala stocks. You've got Globe and Ayala Land. But construction is in focus this morning. Let's take a look at DMCI trading flattish this morning as they bagged 4.5 billion pesos worth of new deals. Now, this brings their total order book to 51.7 billion pesos worth, but that is still 18.5% down compared to the year ago. And most of these projects are mainly from the government, and they have mentioned that the private construction side remains sluggish because of the weak economic conditions. Nevertheless, they did return to black from being in the red, at least in the first 9 months of 2021. Now, what are they doing right now? A lot of other projects, North-South Commuter Railway, you've got the NLEX SLEX Connector Road, Skyway Stage 3, among others. And another one that has just bagged a project, but this time looking offshore, is EEI. They have bagged an 11 billion peso propane project over in Saudi Arabia. That's together with the joint venture with Al Rushaid Petroleum or RPIC. And they have bagged that deal to build a propane dehydrogenation plant project in the Kingdom of Saudi that started already this month, expected to be completed in 2023 with a total of 3,769 workers. EEI has also said they're working on 7 other projects this year. Here are other headlines for keeping our eyes on. The House of Representatives has approved the bill that seeks to extend the validity of the 2021 budget up to December 31st, 2022 on second reading. Bill author and Appropriations Committee Chairman Eric Yap said the programs and projects funded by this year's budget remain necessary to protect the most vulnerable. However, Northern Samar Representative Paul Daza expressed his concern on the language of the bill. Daza recommended the inclusion of a provision that would safeguard ongoing projects whose funding were already obligated but not disbursed. But so far, no individual amendments were made to the bill. The proposal will now be submitted to the plenary for deliberation and approval. The funding for the program to support transport workers via a service contracting program was raised to 10 billion pesos from just 6 billion pesos earlier. Senators made this adjustment in their version of the budget bill, though doubts were expressed on whether the Transportation Department would be able to disburse the full amount. Now, under the service contracting program, drivers and operators of PUVs are paid by the government to ply their routes on a per kilometer basis. The program is meant to offset the effects of the capacity restrictions caused by the pandemic. Senate President Pro Tempore Ralph Recto expressed his support for the program but said other agencies might be able to implement it better, citing the DOTR's low utilization rate for the program's funding in 2021. Now, approaching the end of 2021, most analysts say the worst is over for the health scares as well as the economy. But how long will the scars remain? Here to chat with us, we have with us Michael Langham, Senior Asia Country Risk Analyst at Fitch Solutions. Good morning, Michael. Welcome back.
Thanks for having me back.
Michael, let's take a look back at the past year. We are just a few weeks towards the end of 2021, especially in the third quarter. Was this better or worse than you had expected? Of course, GDP print came in higher than most analysts had expected. Has this dramatically changed your view when it comes to the recovery of the Philippines?
I think we've seen a slight altering of the views. So what we've seen in data is that the normalization process is starting to happen a bit sooner than we had thought. In terms of domestic activity, it's picking up in recent months, and we expect it to continue in Q4 as well. So that's why we've slightly revised up our 2021 growth forecast of 4.5%, but slightly revised down our 2022 forecast to 6.5%, given that the normalization process in the economy is happening slightly sooner.
Michael, you did mention that we would be meeting the government's target of 4 to 5%, according to your estimates. But when exactly do we feel pre-pandemic recovery, like a real recovery, and not, just because of the low base effects?
Sure. So in terms of real terms, we don't expect the economy to really reach pre-pandemic output levels till later in 2022. In nominal terms, maybe we see the economy rebound to pre-pandemic levels early next year. What we see in terms of the underlying recovery and dynamics that will bring the Philippine economy back to its pre-pandemic trend growth level, we expect that to take a bit longer and take maybe over 5 to 10 year horizon, just because of the impact the pandemic's had on debt levels, household savings, business savings, and overall confidence, and the delays in investment as well. So while we expect the economy to rebound to its pre-pandemic level of output next year, in terms of returning to its trend growth rate from before the pandemic hit, that will take a bit longer.
Okay, but tell us, are you still worried about the cases rising in the rest of Europe and impending lockdowns, or can you say that the worst is over when it comes to COVID, specifically with the inoculation targets, whether we're meeting that and whether we are more prepared if a surge does reoccur?
Yeah, I think when you look on a more global basis, the threat from COVID-19 is still prevalent. There's still going to be disruptions going well into next year and likely even into 2023 as well. Whether they're as dramatic as we've seen in 2020 or even this year, we at Fitch Solutions don't believe that's going to be the case. Rising vaccinations, a better understanding of how to contain outbreaks, as well as the rise in booster shots as well, is containing the threat that we've seen previously. Now, like I said, I think the threat is still prevalent, and that's why we don't expect the Philippine economy to rebound quite as strongly as maybe the government and some forecasters are expecting, just because we expect further disruptions from outbreaks and domestically and externally.
But how are we doing compared to the rest of Asia or the rest of the world? Can you compare us? Are we still a laggard here? When it comes to the markets, we did seem to have a catch up, at least over the past few weeks when the economy reopened. But from a fundamental economic perspective, are we still weaker? Are we stronger? Are doing better than expected compared to our peers?
Yeah. In terms of the recovery, the Philippine economy has lagged what we've seen on a more broader global scale. Part of that has just been down to the structure of the economy, so it's very heavily dependent on domestic activity. It's not able to export its way out of the crisis like we've seen in maybe some other Asian markets, whether that be South Korea or Taiwan and China to some extent. But in terms of the recovery as well, the lockdowns have really weighed on Philippine activity, and there is going to be some delay. Relative to other markets in Asia, we've seen certain markets rebound that bit stronger, that handled outbreaks better, whether that be China, South Korea, and Singapore to some extent. But on the other hand, the laggards in terms of rolling out vaccinations are the ones where we've seen lockdown measures well into 2021, like Malaysia and the Philippines, Indonesia. Those recoveries have been somewhat more delayed. So we do see some disparity, particularly because of the vaccination rollouts. And there will be, this is a theme that we expect into 2022 as well, this disparity between the vaccine haves and the vaccine have-nots. And that will continue some aspect of growth disparities.
Mm-hmm. How worried are you about inflation running away, not just here but worldwide, with the oil price scare issue still there on the table, vis-a-vis the accommodative policy stance of the Banco Central? When should we start tightening? There's also been talk of the Fed possibly raising rates earlier.
So just on the inflation outlook, we do see further upside risk to inflation occurring. We've seen these sort of supply demand dislocations and certain commodity prices spiking, and that will keep inflationary pressures elevated going into early next year. But our view is that inflation will gradually come down particularly in the second half of 2022, oil prices, we expect to pare back some of their gains in the second half of 2022 in particular. When it comes to the Philippines, there's a bit different dynamics because of the delayed economic recovery compared to, say, your developed markets. So in terms of the inflation outlook, we do expect some paring back of inflation because of, as I mentioned, energy prices, but also pork price base effects that should have some cooling effect. But then there's the rebound in demand, which will keep price pressures a bit higher, and that from that perspective, with global inflation remaining somewhat elevated, we are seeing developed market central banks beginning to tighten. We do expect the Fed to hike next year, and so we also expect the BSP to begin its tightening cycle as well.
Michael, final question. Your view on how the elections in 2022 will be affecting your outlook here. What are the key issues you're watching out for, specifically when it comes to addressing our twin budget deficit, so to speak, as well as other reforms, economic reforms?
Yeah, so our view is that we don't actually see a huge shift in terms of policy direction, which generally is a positive for investors, that reduced uncertainty around where policy is going to go. But we definitely do expect to see some commentary around the fiscal situation. That will be quite key in terms of in market investors as well, their perceptions of Philippine borrowing costs. And while the fiscal stance in the near term is warranted in supporting the economic recovery, there will be increasing pressure via bond yields on the Philippines to begin its fiscal tightening over the medium term. And the extent to which that happens and the commentary around that in the election will be something we're looking for, and most of our clients are looking for as well. Just to touch on one other thing, the reform momentum, that's huge for the Philippines coming out of this pandemic because of the drop-off in FDI in 2020. To get that rebound and make sure that the Philippines is the destination that investors choose, we still need to see some continuation of the reform process that we've seen in recent quarters, whether it be the corporate tax rates reduction, but also these changes around foreign ownership rules. So further progress on that front would be a boost, and any commentary from candidates would definitely support investors' outlook to the Philippines if there's some certainty around that fiscal situation and the reform momentum.
Okay, so some reassurance there specifically for the foreign investors of continuation in the momentum of passing these more accommodative bills, as well as continuity when it comes to policy. Thank you so much. That was, of course, Michael Langham, Senior Asia Country Risk Analyst at Fitch Solutions.
Thanks for having me.
And that's a first look into the business day. Today is Tuesday, November 23rd, 2021. Catch Businessworld live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.